The big dog that is Apple is today's subject video. Hedge fund investor Dan Niles says Apple is now his largest single stock short, says Dan Niles. Oh boy, okay. A couple videos I want to react to. One's bearish on Apple, one's bullish on Apple. Want to react to the video from Dan Niles here, explaining why he is obviously has Apple as his biggest short. Want to hear his perspective. Does he think, like, how low does he think this stock's going to go? Are we talking 170, 150, 130? So I want to hear what he has to say in regards to that one, which, by the way, Dan Niles and I, we started off on a rough patch a while back, but slowly but surely, I think we're coming together more and more. So now I like this Dan Niles guy. Then I want to go ahead and watch Dan Ives say why this is no big deal. This is no big deal. Apple's just fine. Nothing bad happening. Nothing to look at here. Dan Ives, recently bullish on Palantir, usually very bullish on Tesla. And in regards to Apple, nothing. Okay, so let's hear what he has to say and react to that one. I appreciate everybody joining me as always. Thanks so much for full transparency. I think everybody knows this by now. I've showed it many times, but I do have some puts on Apple. This is not to try to necessarily make money. It's really just for hedging and for protection from my portfolios. I have several different hedges on in the market against different stocks and indexes in case we have any sort of major downside risk in the market over this next 6 to 15 months. One of them is Apple. These puts expire in March of 2024. There, I got this put, a couple put options here. These ones expire June 21st, 2024 on Apple there. I have this one that expires March 15th. 190 puts there, and I have this one that expires actually in January. There's a 180 puts in regards to that one. And like I said, all those are just for hedging. Usually if I'm going in for a hedge, I'm usually going in thinking I'm going to lose the money. It's for protection in case things go really, really bad in the market in general. So hope you guys enjoy this as always. Appreciate you all joining me. If you enjoy the content, you want to support on Patreon. There'll be a pinned comment down there. You get access to see the moves I'm making, which I'm making moves in there in less than 24 hours from now. You also get to be part of that Discord chat. I also have this one that you get access to a course as well. Alrighty guys, let's get into this.
Name mentioned a few times in the last segment. So Dan, we have you now on the line of Satori Fund. Thanks for being with us. You outlined a number of reasons why you're short, including those latest reports from China and, quote, no AI play. In your view, what is the biggest risk to Apple at the moment?
Well, so one thing that hasn't come up in this last segment, which is what's the risk you're taking on for owning it? And one way to measure that is what's your PE ratio and what's the growth you're getting. So if you look at it from that standpoint, you're paying 28 times PE for Apple. Revenues grew 2% last year. They grew 1% this year. And you can buy the S&P at 21 times. So the multiple, if you look at it, has actually expanded about 7% from 2 years ago, while the revenues are dead flat and the EPS is down. Now, by the way, if you think that's an aberration, if you go back to before COVID, Apple's revenues were down in fiscal 19. COVID just supercharged that revenue growth. And by the way, the 4 years prior to COVID, smartphone sales were down every single year, year over year, for the industry at large. So Apple really has benefited tremendously from this, from COVID and everybody having to buy an iPhone.
Oh my goodness. Hold your flippin' flapjack and horsies for just a moment. We agree 100%. I've been saying this for the longest time. Like, Apple's had this massive boost behind them from all the stimulus, from all the work from home stuff, and that obviously pushed through really into 2022, even to a decent extent, right? And then you slowly start to see things start to weaken at the end of last year, and obviously certainly into this year, and now the company actually has revenues literally going down. Now at this point in time, with a potential it could get far worse if the employment market got worse, right? I mean, because let's be honest, Apple's been putting up these numbers with unemployment rates and stimulus, unemployment rates of 3%, all the stimulus money. I mean, it was the perfect kind of supercharge for them. It doesn't get better than that, right? And so now they have to work against that. And meanwhile, you got the highest valuation on the stock we've seen certainly in maybe ever. Certainly in, pretty much since the major growth days of the Steve Jobs days.
Or a PC. And if you compare it to the other mega cap stocks that are comparable, so Google, Microsoft, Meta, their revenues are up between 10 to 22% or so over that same 2-year time period. And their multiples have actually gone down about 7-8% or so, as has the multiple for the S&P 500. So the risk is something that I know nobody cares about risk anymore, with the belief that the Fed's going to bail you out every time the stock market goes down, or you're going to get stimulus checks. But that's the thing you need to think about, which, a lot of people aren't.
Well,
yeah, and the great thing for many of the other big tech companies, well, all of the other big tech companies for the most part, right, other than maybe Tesla and Tesla, is they don't need you to buy $1,000, $2,000, and $3,000 products every year. Apple does. Let's be very clear about that. Apple needs massive quantities of people to go buy another $1,000 device, $2,000 device, $3,000 device next year to put up the numbers that you need to put up, right? If you have a consumer that's even in a worse place next year, if you have an unemployment market that is in a much worse place, that's obviously going to weigh on Apple pretty darn significantly. The services business has become a big business for Apple, but let's not fool ourselves. This is still an iPhone business.
That's why we have you on, Dan, to highlight some of those for us. So I think what you're saying, though, is that over COVID, consumers were purchasing goods over services, and you're saying that that's going back. But what do you make of the argument around Apple that it's no longer reliant on iPhone sales, but it now relies on its installed base of over 2 billion devices? So its thesis going forwards is actually about that services side of things, which has...
I'm interested to hear what Dan Niles has to say, but that's just not mathematically or factually correct. Apple is still as reliant on iPhone as, I don't want to say as ever, but they're still insanely reliant on iPhone. It is such a majority of their revenue still. It's everything to Apple still at this point in time.
Growing.
Well, you got to remember, Deirdre, they had a big install base in 2019 as well. And their revenues, when you include the services growing really fast, was still down that year. So you can say services all you want, but here's the thing. Where's their growth coming from? It's coming from emerging markets. So if you look at China, where they're expanding into, the GDP per person there is much lower. They're not going to be buying as much services. They're going to be buying more of the lower end of that lineup. And so you have to put it all in context of, you can say services a lot, but what is it actually doing for revenues and earnings? As I said earlier, their revenues and earnings are exactly where they were 2 years ago. The other Magnificent Seven, by the way, you can buy it in much lower PE. So you can buy, Google or Facebook or Google and Facebook in particular at 23, 24 times. The S&P is at about 21 times. And you're getting, between 8 to 13% revenue growth from both of them. We don't own Microsoft for the reason that it's at a 32 PE, but its revenues at least are growing 9%. So I think you have to balance all that. And by the way, we own Meta, Google as well. Intel's our largest position right now. We own Amazon. So we like big cap.
Dan Niles, seriously, don't tell me you just said Intel's your biggest position. We were just starting to get along.
As well, Intel's our largest position right now. We own Amazon.
Dan Niles, oh man. We were just becoming friends, and then you say Intel's your biggest position. Intel? Dan Niles, you're Intel the biggest? Okay, if you want to own some Intel. You think it's going to bounce over the next 6, 12 months, whatever. But your biggest position? No, not Intel, Dan Niles. Come on, out of all the stocks in the market, Intel?
We like big cap tech. We just don't like Apple. And we have a note on our website that goes into all the details around it. But if you think about the fourth quarter coming up, which is a retail quarter, you've also got 40 million student loan repayments starting on October 1st.
Good point.
And the price of the iPhone is probably going to go up. So that's not a good mix in my mind when you look at it and you put in the PE and the growth rate.
Good point.
It's Kelly here. I just want to jump in with 2 quick questions that are related. One is, what's your dating history with Apple in terms of shorting it or being long or just kind of track record? But the second is also, I don't hear much of this conversation focused on China. I hear you talking about valuation, and maybe that's going back to historical, U.S. student loan. I mean, is China as a risk something that's entering your investment world or not?
No, absolutely. That's why if you look at our latest set of tweets, Kelly, I was just sort of mentioning valuation because it hadn't been brought up in the bull case, because you can't bring it up because there's no defense. But if you look at China, yeah, that's a big issue, because the thing people forget is Huawei was 19% of the global smartphone market at its peak in, I think, the third or fourth quarter of 2019. Then the sanctions came in and their market share literally went to, just collapsed. Now they've got their first new flagship phone since 2019. I don't think it's a coincidence that the Chinese government, at the same time that flagship phone is coming out, is talking about trying to, restrict government employees and state-owned entities from having iPhones at work. And so you put that together, and Apple being 19% or so of 19% of Apple's sales coming from China. This is a huge deal, and that's why in the post we put out yesterday, we said, you know, Huawei's got this new phone coming out. We're selling our long. Our plan is to get short, and as we thought about it more during the day, you know, given the valuation differentials and what we own in big cap tech anyway, we're like, this is a perfect short against.
Yeah, so before he finishes here, as far as shorting Apple stock, you know, certainly I'm not the biggest fan of shorting stocks in general. You know, if you want to buy puts, okay. Shorting straight up, not the biggest fan. But what I will say with Apple is there's not huge upside risk because of where the valuation is trading at right now. So, you know, there's certain stocks that are insanely dangerous to short because they can make 50%, 75%, 100% moves, and they can do it quickly. NVIDIA is a perfect example. You want to short NVIDIA, you either don't have a brain or you got the biggest you-know-whats in the world, okay? Because that's a whole different ball game when you're talking about NVIDIA. You want to short Tesla stock? It's a whole different ball game. And sure, if you can get that timing right, man, you can make a lot of money, but those stocks can pop 50%, 40%, 70%, like in a matter of a couple months, right? Apple's not doing that. Apple's not popping 70% in the next few months. The best case scenario for Apple in the next few months is it goes up 10%. That's best case scenario. There's a scenario where it goes down 10, 20, 30% also over the next few months. So, yeah, you know, like I said, not the biggest fan of shorting, but what I will say is there's not huge upside risk in regards to Apple.
Longs that we have, and so that's why we put it on. So the catalyst is really China. Nobody cares about a valuation until the stock starts going down, and then people have to do some homework. And so that gives you the downside risk in the name.
All right.
Okay, so, you know, another risk factor with Apple that's not ever talked about, and I think it should be considered for everybody out there, is what's the most owned stock in the stock market? Apple. If we were to go through some sort of scenario where unemployment went up a lot, where people had some real financial hardships at some point in the next year, year and a half, people will sell stocks. They will sell 401ks. They will cash out. They will grab money if they need to, just as they did in the great financial crisis. And what's the number one stock that would be hit in that scenario? Obviously, it's Apple, because that's the one that is the biggest weight in the S&P 500. It's the biggest weight in the NASDAQ. It's the biggest weight everywhere, right? And so it could just be relentless selling pressure if you were to go through something like that, all during a time period when their business is also getting hit very heavily. So these are some factors to kind of keep in mind in regards to the whole Apple story there. And I think it is important to just be aware of that, because that's something no one talks about, what I just explained there, okay? Hope you enjoyed that. Alrighty, next one up here. Dan Ives. Apple pullback in China will only mean 500,000 units at worst. Dan Ives says this is nothing to worry about.
So let's just take the movement in the stock in and of itself for a couple of days. What's happening, you think?
Look, I think the biggest fear for Apple has always been the China exposure. And I think the worry is that they were ultimately going to be caught in this cold tech war between U.S. and China. And I think when you look at these reports, now it's 20% of iPhone sales, 98% of actual production. Could this disrupt the golden jewel of the Cupertino growth story?
Could it?
So in my opinion, based on all the work we've done, I believe this is bark a lot worse than the bite. I mean, when I quantify it in terms of what this could be, I've heard some of the numbers out there. I think worst case, we're talking about 500,000 units relative to what's going to be 45 million units sold in China. And then look, we've been here before. I mean, I think year after year, there's always the worries here, but all the work that we've done being in and out of Asia and China, I think right now, actually, China is going to be up in terms of year over year. And I think that market share gains continues to be some of the hearts and lungs of Apple.
That's fair, but doesn't it have the possibility of just revealing a more hostile environment in a real critical market where we just said 20% of revenues come from China?
Yeah, look, this is putting gasoline on the fire in terms of the worries. You know, could this ultimately be the moment that the bears, many that have been fearing for Apple in China? I don't believe so. I think when you look at it, especially when you think about Foxconn, you're talking about basically one of the biggest employers in China. Cook obviously has been something where I think this is within Beijing. It's been a big part of his strategy in terms of the success. And I think most importantly, when you look at the Huawei phone and you look at can this be a risk, we're still talking about the B team. I mean, in other words, when you look at from an actual nanometer, from an actual technology perspective, the Chinese consumer continues to want iPhones, and we believe you have about 80 and 90 million of those in an upgrade opportunity.
So we asked our question of the day to our...
Yeah, so the view of China could be, well, if people aren't buying iPhones, they'll buy Huawei's, which is better for us overall, right? And so that's why they could be less incentivized. And we do know Apple, this is known. Apple's trying to get production out of China. They're trying to get production into India, right? And obviously with China, Taiwan, and whatever happens there, that's a whole situation in itself. So, you know, if anything, it seems like Apple's trying to become less and less reliant on China, and that's probably good for their business long term, but not really short term, because if you're looking at it from the Chinese perspective, like, oh, so you're going to, you know, we've been working with you guys all these years, and now you're going to go start giving all this, production over to India at a point in time where our youth unemployment is at 20% or so, right? If not higher than that. I don't know. I'm not sure the Chinese government's too happy about that, right? So I think that's a factor to at least take into account.
About the multiple, 29 times forward. Now, it was over 30 not that long ago, but even now it's far above its historical 10-year average, okay? Can you justify that? And if so, how?
So I've always viewed it that you have to view the services business as almost a SaaS business. Call it $100 billion of revenue next year, growing now low double digits. I believe that's worth 1.4 to 1.5 trillion, the services business. The rest of the business, even base case, call it 1.4 to 1.5 trillion. We ultimately think more, which is, you know, how we have a $230 price target. I believe if you look at it on a straight PE, you underestimate what I view the value of the services piece, which is a key part of the re-rating that we've seen in Apple the last few years.
I understand that, but how can you have an expanding multiple at a time where you've had a decreasing sales growth?
Thank you.
Tell me how that makes sense.
Thank you.
I think first off, when you take out FX, when you actually look at what iPhone sales are, I think when you look into the next year, you're going to have, call it, mid-single-digit iPhone growth from a unit perspective, based on all of our checks coming out of Asia. You have an ASP now, which is actually lifting. That'll be the
okay. So I understand not everybody looks at Apple's, quarterly earnings. Let me pull up Apple's latest quarterly earnings, and let's see what's really going underneath the hood. Alrighty, folks, this is Apple's latest earnings, okay? Now, keep in mind, it looks like they had an extra week in this month, which is intriguing, because this ended July 1st, 2023, versus the quarter last year ended June 25th, 2022, so one thing to keep in mind there, okay? So, products revenue was down nearly $3 billion. Now, services revenue was up very nicely, but it's not enough to offset the product revenue. So overall, revenue was down over $1 billion in the quarter. About, we can call it roughly $1.2 billion in the quarter revenue was down. So that's where you get into this whole, we have an expanding multiple into a company that's revenues are down $1.2 billion year over year, and that's what looks like an extra week in there. What? Okay. If we obviously look at gross margin dollars, that was up on a year-over-year basis, but do keep in mind it kind of looks like there's an extra week there, so that's just something to keep in mind. Operating income actually was down very slightly, and net income rose very, very slightly for the business overall. Obviously, they're always buying back a ton of stock. So, nonetheless, you look at these earnings, and you can't say those are some sort of, obviously amazing earnings when it came to Apple, right? And so that gets into the whole debate of, once again, how do you have an expanding multiple into a company that's revenues are going down, and revenues going down in an environment where unemployment's in the threes? The employment picture doesn't get any better than this. What would Apple's revenues have been this past quarter if unemployment rate in the United States of America would have been 5% or 6% or 7% or 8%? Those are things to just take into account, right?
I think next week,
like what would their revenue, what would their product or revenue have been down? 5 billion, 10 billion, 7 billion? Like, that's a big question.
iPhone 15.
There's talk that they'll raise it.
And we believe $100 price increase, really first time in years, but that's important from an ASP uplift.
Wait, hang on real quick. So you think that's going to happen? Because there's, chatter in the market, well, it's just rumor and this, that, the other.
From what I heard, they were going to keep all iPhone prices the same except for the highest end model, they were going to go up $200 on the very, very, very highest end model, which wouldn't be a bad strategy just because they probably view it as, well, the people with a lot of money that get the highest end iPhone every year, they're still going to get it even if it's $200 more. So that's what I heard. We'll see what happens, obviously, but that's what my information is.
You think it's going to happen?
Yeah, I think NFL starts this weekend, and Apple raises by $100.
And you think that's a good thing?
I think it's a great thing because ultimately when you look at the promotion activity that's going to happen from a carrier perspective within the U.S., I think it's going to take away a lot of that sting in terms of any sort of price increase. And the most important thing right now is 25% of Apple's install base. If there's one number that's important, 25% have an upgrade in 4+ years. And that's why we believe the bar's going to be worse than the bite here. China ultimately is going to continue to be a growth engine. And I think we sit here 3-6 months now, especially as we go into holidays, we view this more as a golden buying opportunity, not the time that structurally it fell apart.
Okay, I'll see you out in California, out at Future Proof. And we're going to be there together as Apple does reveal that phone.
And it's such an important time, not just because what it typically is every year, but because of now the pressures, especially coming out of Beijing, at least perceived pressures.
Spoiler alert, the iPhone's going to have a new charging port, and it's going to have a little better camera than last year, supposedly, and it's going to have a little faster chip than last year, okay? Woo! It's basically the same phone as last year, okay, folks? It's not going to be anything special. We all know that, right? And it's coming from an Apple fanboy himself. Now, it's a fascinating situation in regards to this whole Apple phenomenon because we're looking at a company that is fine long term, right? But they've got to deal with a lot of headwinds here in the short term with a very high valuation. And that's where the struggles come in. And we do know if the market goes down, we do know Apple's going down, right? And it's clear like Apple can definitely go more to the downside than certainly the market in general, as you've seen just kind of in the past couple trading days here. Going up on, let's say they do go up on all their iPhone price, definitely not the best time to do that. I'll just put it that way, okay? I think they're going to have trouble trying to reach volume as it is. And so to then go up on price right now, I think with a consumer that's already very stretched is not the best timing in regards to that. Apple's gotten away with that for a long time, just raising the price of the iPhone. But that was into an employment picture that was just getting better and better, into an economy that was just generally getting better and better over the past 15 years since iPhone came out, right? And now we're into a situation where clearly, if anything, things might be deteriorating a bit there. So those are just some things to kind of keep in mind. We'll see how it all plays out. I appreciate everybody joining me as always. Thanks so much for being here. Thanks for being subscribed, folks. Much love and have a great day.